Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So as any geopolitical tension starts in the world, gold starts living with its own life, so has no relation to other financial markets. It's becoming absolutely separate market. It's driving with its own laws. So as you can see, everything was standing really great on the background of the inflation report that has been a bit greater than expected. And gold has shown nice drop, and actually we could say that first our target 2010 has been touched, but then United States coalition have made the invasion in Yemen, and you could see what has happened. So actually gold starts rising. The same we could say about crude oil, and in particular speaking 10-year yields, so they have turned down. So demand for the safe haven exits, although it may be in minor degree by far, because the conflict just has started. My personal opinion, this is the big mistake, and I think that might be really big, bad consequences for this coalition in Yemen might happen. So we will see. But the fact of the starting of this conflict, it's already makes investors nervous. And taking it all together with the rising of the crude oil, breaking the normal logistics for the delivery of the goods, and the global merchant across the globe is making it more expensive, significantly increases the inflationary risks in the nearest 3-5 months. So, but currently you can see that this reaction mostly stands on the geopolitical tension. Depending on how situation will develop, here we could get the different performance. But already for now, we could say that probably we should get some greater upward direction. Currently, we're not speaking about yet on a possible upward continuation, upward reestablishing of the strong major upward trend, although we have bullish context on the monthly and weekly chart. Currently we are taking a look at some near standing targets, but still potentially this really could lead for the further acceleration, because despite that market was calling around the lows of the high wave, the real breakout hasn't happened and it's returning right back up inside of the body of this pattern. This potential means that first it should move higher to the top, somewhere around 2060, and then we will see what will happen, because potentially we could consider two different patterns. This very often happens. Previously we have seen this in the euro currency, and here we could see it again. So first take a look what has happened with our targets. Just some sense, market hasn't quite reached the OP and butterfly, but mostly we could say that this has happened. So this downside performance is done, and then market shows the sharp reversal based on geopolitical factors. First pattern that we're considering that might happen here is of course the head and shoulders. So that would be left shoulder, head, and then might be right shoulder to form with the upward acceleration. But potentially, depending on how situation will develop, we could consider another head and shoulder, which will be greater scale. So that might be the shoulder, left, head, and another shoulder might be formed a bit later. So as you understand, both of these patterns mostly stands in favor of the bullish positions. And currently with the sharp reversal, intraday sentiment has changed. Now we're considering possible taking of the long positions here based on this performance. Particularly speaking, returning back to the picture on the hourly chart, you could see that actually a market still stands inside of the channel to the downside. But now it is coming to the upper border and is testing confidence resistance around 2042, 2044. Today we have these levels slightly lower just because market created the new lows, and that's why all levels have been moved slightly lower. So once this resistance will be tested, actually you could see this multiple testing of this area already. That's, by the way, what I was talking about in the beginning of the week. We said that, for example, market could stand flat, but the channel is moving down, and that's why at some point it will appear that the border of the channel coincides with the fib levels. And then if you remember, in the beginning of the week, these levels were standing right here in the middle of the channel. Now it stands even outside of the channel. So here's conclusion is simple. once market will test this level, we'll be watching for a bounce and considering two levels for possible taking the position 2029, 2023, these two fib levels. This strategy has a relatively small risk. Stop probably could be placed ultimately below the head, or even, I suppose, below the 618 level. It's also possible. And then we will see what will happen. Because in current geopolitical background, personally, I do not want to consider taking the new shorts position, especially at the beginning of the weekend. So today probably we will do nothing, just because market right now is testing the confluence. And some action we could do probably only on the next week, when we will see the reaction on this confluence area, maybe some retracement that we would like to get. And then we will make decision. But it seems that the sentiment on the gold market starts changing thanks to geopolitical confrontation in the Middle East again. So that's our 2 cents on the analysis of the gold market.